Hi, my name is Jason Dinesen. I'm an enrolled agent in the state of Iowa, near the capital city of Des Moines in the middle part of the state. And I'm a practicing accountant and also a presenter here at myCPE. I teach a lot of different tax topics, especially relating to individuals, and have been presenting here for over 3 years and teaching classes overall for nearly 11 years. And I wanted to talk in this myCPE short about a specific problem that is happening to a lot of folks, especially married couples, but it really could happen to anybody. And that is that you're not having enough taxes withheld from your paycheck. So you file your tax return at tax time and you owe a bunch of money. And I've had this happen to me. My wife just on Friday got her W-2. She started a new job in the middle of the year and made a little over $20,000 in 6 months. And the withholding was zero. And, as a tax pro, maybe I should have paid attention to her pay stub, but I didn't. We're all humans. We don't pay attention to our pay stubs. Maybe we should. So there's a couple of things. There's look at your W-2, look at your pay stub too, and see what's coming out for federal income tax withholding, because it could be a lot less than you think. It could even be zero. My wife is not the only one that's happened to. I had it happen to multiple clients last year. I've talked to other practitioners who have said that they've had the same things happen to their clients too. So let's take a look. Well, I want to share my screen. And we've got the W-4 pulled up. This is the source of your problem if you're not having enough tax withheld from your paycheck. So there's a few things about the W-4 that can be problematic. One is this would apply to anybody, whether you're married or you're single. If you have more than one job, chances are there is little, if any, withholding from a second job that doesn't pay a whole lot. You work part-time, maybe on Saturday mornings or something, doing something. Overall, each paycheck that you get from that part-time job is going to be small. And so there's probably going to be little, if any, tax withheld. But when you add up all those paychecks over the course of a year, it could come to $5,000 or $10,000. And if you're adding that to your other income, and maybe you're already in like the 22% tax bracket, suddenly on that $5,000 of part-time income, you owe over $1,000 of tax on that money. And you didn't have any taxes withheld, because the withholding tables, the way I like to explain them is they're basically set up under the assumption that whatever you're making at that particular job is like the only pay that you have for the entire year. And so if the wages are low, there may not be much tax withheld. And then for married couples, it's kind of the same concept, where there's just the way that the withholding tables are set up, it's quite common for not enough tax to be withheld. And especially on that lower paying job, it could be zero tax withheld. So I want to show you a few things here that you could watch for on the W-4 and a fairly simple fix. So another thing that trips people up on withholding is right here under step 3, claiming dependents. And what this means is you're accounting for the child tax credit here. Now this is really, it's optional. I think the IRS wants you to do this. If you do it, you should do it on the higher paying job, not the lower paying job. I've never seen anything that specifically says you must account for the child tax credit, but say you have 2 kids times $2,000 for the child tax credit. So you say, oh, I'll put $4,000 here. Well, when you do that, that reduces your withholding over the course of a year by $4,000. That could have a big impact on the amount of tax withheld. So what do you do if you want to fix this? You can see I've already been playing with this because I've already got $100 in here. Let's just delete that. We're going to put it back in just a second, but let's delete it for now. I think step 4C is everybody's best friend, because this is where you can say, you know what, my paycheck is short and I'm going to owe at tax time and I want to get enough taxes withheld. So you just figure out, now this is each pay period. So how many pay periods are there in a year? Say that there are 24 pay periods in a year and you owe $2,400 on your tax return. So to fix that, you have $2,400 divided by 24 pay periods equals $100. So you need $100 withheld extra each payday. And maybe you decide, I want some cushion. So I'm going to put 150 here. Technically, there's no limit. I suppose the limit would be whatever your gross pay is. But, there's really not, for your average person. You can put 100, 150, 200. You could put $20. Whatever you want it to be. And this will fix any under withholding, and it kind of cuts out all the rest of this. This can get complicated, multiple jobs worksheet and all these other things that might be complicated. You just put the extra withholding right here to fix the problem of under withholding. Now, what if you're like my wife and you look at your W-2 and you say there's no taxes withheld, and you say, what's going on? Actually, I think there were different words that came out of her mouth, and we try to keep this family friendly here. So your reaction is whatever, what's going on? Your first reaction is probably going to be to contact your human resources and be unhappy with HR. But the reality is HR was just using your W-4 and what the withholding tables say. And so if you had 0 tax withheld in 2022, that is water under the bridge. You can't fix that now. So your tax return is going to be whatever it is. It probably will be unhappy. But for 2023, you fix it by using step 4C and putting extra withholding on your W-4 to make up for whatever shortfall from the withholding. Maybe the withholding is 0, or in some cases taxes are withheld, but it's just not very much. Whatever the case is, you make up for it here by electing to have extra taxes withheld, and that'll solve your problem.